another reason why banks, I think, are not going to be as innovative is purely, I think they are fat and happy with corporate cash management innovation. Treasury services, you talk about bankers innovation, we are spending so much time and money on innovation. What are they doing? Corporate cash management. But what is the business of banking? Consumer banking, small business lending, and that's where small business lending is ripe for innovation, consumer lending is ripe for innovation, mobile banking business, taking care of millennials, the future. Millennials hate banks today, and banks hate having millennials come to them.
But Jay, I think part of what you called out is that convenience, flexibility are valuable. Right?
Yes.
So that is part of this sweet spot. We need to define innovation, right? If we look at it and say, how can you support clients? And I would disagree to a degree that simply dropping fees is innovative, right?
No.
So fees are a completely separate discussion as we talked about it.
But having an experience, experience with no fees,
right?
And making
but if
them
you're not innovative in other ways, that won't bring you into the future either.
Do you know what the thing that was common across all 4 points that you made? They were all talking about organizations thinking about what's best for themselves.
Yes.
What is it about them that they can do to help themselves? Innovators, by definition, are trying to create a superior experience for the person that's paying the fee. So whether it makes the fee goes away, the solution settles more quickly, it's easier to use, right? That they are creating value for the end user of that solution, whether it's an individual as a consumer, whether it's the client of the wholesale bank, it's about driving to that end consumer. And I bet if we did a survey of people in the room today, and we asked them how many of you are spending 10% of your marketing dollars in talking to consumers and understanding what they want, what they like, what they don't like about your solution, just 10%. My guess is that there'll be nobody raising a hand in the room. Well, maybe I've got a few. So congratulations to you that are forward thinking. But I promise you, everyone that's outside in the meeting rooms and in the hallways are spending huge percentages of their income stream or their venture capital dollars understanding what the market needs and figuring out how to make that business model deliver for what the end consumer or the end client is.
So wait, Barry, let me just ask. I mean, what would you say if we have a room full of people that are innovators here? What would you say is the advice you'd give all of them or some of them here to really help banks, with some of this change to keep up? I mean, they're all companies that want to either partner. Many of them are companies that want to find ways to partner and become, revenue generators from the banks, right? What can they do?
I spent the first 12 years of my career as a classic product guy at Procter & Gamble. So I know more about deodorant and shampoo than anybody should know. But companies like that get great because they spend a disproportionate amount of their time talking to the end consumer and understanding what they want and not getting so hung up in, I have a product that I want the consumer to buy, and instead of turning the tables and finding out what is the product the consumer wants to buy, and then we go make it. And then if I can build it myself, great. And if I can go find a great partner to make it a shortcut for me, then I partner with somebody that can make me go faster. Yep. But I start from a point that says, I understand what my consumer needs better than anybody. I'm going to deliver on what that need is. And I'll build it, I'll buy it, I'll partner with it. But I'm always driving towards improving the relationship and the experience of the end consumer.
Jan, what are the questions you get from these smaller companies that I remember consistently asking you, when is it going to be time to change? And what do they want, really?
Part of it is when you think about it from either a banking perspective, from a ACH perspective, or from the businesses that need to use the banks for payments, part of it is to make it simple. And I say that from an organization that's focused on rules and detailed rules and formats, and every time we talk about doing something, we get down into the bits and bytes and the technology, the obstacles. If we can use technology collectively to make it easier, I think it'll be a win-win for everybody. Yep. So to move over the barriers of where we are today. I mean, the fact is there are a lot of legacy systems in banks, and that's a barrier. It's a barrier for payments, it's a barrier for corporates who have AR/AP systems or billing systems within their houses. So you have to take that as fact today and then say, what can we do to help us bridge from today to tomorrow? And if you have easier ways to do that, then I think we help move the pendulum more rapidly than just saying it's hard and it costs money.
Sure.
And especially in a system where you need everybody to move at once.
Phil?
Yeah, I'm really confused. You were talking about ACH. If the inference is that the consumer doesn't want this change, that's nuts. Apple is perfect example of coming out with Apple Pay, of explaining what the consumer wants, right? It's a great example. I mean,
how does Apple Pay provide evidence that a consumer wants?
Well, because in his Procter & Gamble example is that Apple went out and actually went out and developed something that the consumer actually wanted, and that's why they've gotten the adoption that they've gotten. But listen, and there's a whole bunch of work that's been done, and believe it or not, banks have actually done some of this work. Do you really think that when you go to the store, and you know, my wife can go to the store and not even go to the store, she can call up and order 3 dresses, have UPS deliver them to the house, try them on, keep one, have 2 sent back to the store before her credit card gets posted to her account. Do you think that's what the consumer wants from today's technology? BS. Right, BS. Young, savvy, millennial, technology smart people, they know that technology is better than that. They want real-time, interactive, instant gratifying technology. They don't want this 1974 crap that we call modern payment technology, right? So,
but I guess I gotta challenge you, I think, on one point there, which is I don't know that consumers at the end of the day care how a transaction gets routed. They just want to know that it works. That they're making a decision on
they care about time.
They do, and if you
and they care about accuracy, and they care when they walk into McDonald's with the brand on their card and the brand in McDonald's and the brand on their card and the brand at Penny's or Saks Fifth Avenue, that when they have an issue, that suddenly there are all these other brands involved, that they can't get satisfaction out of what took place because, oh, it's really not us. There's all these other steps involved, and there's a ton of consumer-based research that will tell you that that's one of the #1 causes of consumer dissatisfaction in payments.
But at the end of the day, the current credit and debit networks work and deliver a solution. It doesn't mean there can't be a better solution.
1976 kinds of ways.
But I think that if you went and asked consumers, do you care if it routes on a debit network or goes to an ACH network, I think the consumer's going to say, I don't care. I just want it to work. I want to know it's secure, and I want to know that if I have an issue or dispute, I can solve it.
I don't want to get into an argument, but if you ask, if you look for empirical, you look at empirical data and you ask people if Amex's direct closed network works better than the scattered open network, they will tell you that there's a huge difference in the quality of
Why don't we start to get ready to take some questions? We have a few minutes left, about 10 minutes.
But I got to say one thing on that.
Go ahead. But
I
while
think if you go back and ask consumers, they want it to work. And if you think by just having a different way to settle it is going to change consumer behavior, I think that's mistaken. I think go back to your Target example. It settles in a different way, but Target is providing a really valuable incentive to that consumer that makes them not care about how it settles.
So
it's about making it right for the consumer.
So part of this is we're dealing with what is the customer experience, right? What's the convenience, the flexibility, what's the trust factor, right? And then you're going, so what are the mechanics of how we get it done, right? 2 different discussions, right? 2 really different discussions. And part of that is thinking about it, and I'm obviously ACH, centric in my thing, but there's a settlement layer, as Phil called out, that is very different than an authorization layer or a messaging layer, and or enabling tools And enabling tools are where we see the innovation, right? So I think we just have to parse those conversations and say, how can we innovate from an enabling and from a trust and a security way?
Right.
And then how do we keep the plumbing working as efficiently and as effectively and as risk-free as possible? And you're right, the consumer shouldn't know about that, but a lot of people in this room have to worry about that too.
Well, the consumer basically wants, help me save money, make me feel good, make sure it's secure. And how do you do that? Okay, how do you do that is by giving it all to them. And giving it all to them consistently, again and again and again, and providing security to them. To give you an example, today, I mean, there's no reason why a consumer shouldn't be able to walk into a car dealership, take a picture of the car, and immediately get a feedback from their bank whether you should buy it, lease it, because we have all the information about how much money they have and how much is coming in, and that's done instantaneously, and you recommend to them it's better for you to buy versus lease, and if you want to buy it, bang, here it is for you, and all done in 25 seconds, and forget about this nonsense, all about the legacy systems, and ACH does this and all that stuff. It is consumer, that's what they want.
But that's enabling, Jay.
Yeah.
We're saying the same thing, right?
Okay.
But that's an enabling application
But
that's
that
fitting a need.
can be
it's
done.
very different than the mechanics.
That can be
right?
done today, and let me please ask you, how many bank CEOs are in the audience over here, or bank CEOs are at this conference? I'd just like to know. That tells you something. What's important gets done. Are you into innovation? These are, you have entrepreneurs sitting over here who are creating that, but not the bankers are sitting over there. Why should I go to a Money 2020? Those are a bunch of yo-yos, you know, who are just, and they can't do anything without banks.
There are bakers.
On that note, why don't we see if any of the innovators, for lack of a better term, in the audience have any questions? And I think I see one right over here. Thanks.
Hi, well, first of all, on behalf of everybody, I would like to thank you for having probably the most entertaining panel of the day.